everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of the conclusion chapter from the book Crypto Swing Trading by Jai George. It has been created with the help of AI. You can read the original post at samfury.com.
All right, welcome back to the deep dive. So you want to dive into this whole crypto swing trading thing, and you sent over some excerpts from this book, Crypto Swing Trading by Jai George. Sounds pretty interesting.
Definitely a good one, yeah.
Yeah. So we thought, let's really unpack the key takeaways, especially from the conclusion he offers. What actionable advice is he giving?
Yeah, I mean, the conclusions are always where the gold is, right?
For sure.
Yeah.
So let's see what we can glean for you today.
Sounds good.
Okay, so the conclusion of crypto swing trading, it highlights 4 core lessons.
Right.
Yeah. We've got finding that balance, that sweet spot between short-term noise and long-term trends.
Right.
Then there's combining technical analysis with fundamental analysis.
Mm-hmm.
Prioritizing risk management, which is always, at the forefront of our minds.
Super important.
And then, of course, practicing patience and keeping those emotions in check,
Yeah.
which is way easier said than done.
Absolutely. That's the human element, right?
Yeah.
Always the wild card.
Right. Emotions are a wild card. Okay, so let's I guess let's just start from the top. Trends.
Yeah.
Everyone's chasing those trends. How does a swing trader actually, use that in this crazy crypto world?
So think about it this way. Imagine you're looking at, let's say, Bitcoin's price chart. Let's say over like a 6-month period. What you're going to see is like a ton of ups and downs, right?
Oh, yeah.
That's what we call that short-term noise, all that volatility. But when you zoom out, right, if you're looking at the bigger picture, you might notice that there's like a broader upward trend, even though you have those dips along the way.
Yeah.
And a swing trader, what they're trying to do is basically ride that upward wave.
Okay.
And they use those dips kind of like as buying opportunities. They're not panicking when it goes down a little bit. They're looking at the long game.
So it's all about recognizing the patterns.
Exactly.
And not getting too in the weeds.
Yeah, not getting lost in the daily drama.
Yeah, the daily drama. I love that. And I feel like that applies to life in general too,
Yeah.
Like not letting those daily setbacks derail your long-term goals.
100%. It's about having that strategic mindset no matter what you're doing.
Yeah, exactly. And then to actually, analyze these trends and market movements.
Right.
Swing traders use these 2 main approaches. We've got technical analysis and fundamental analysis.
Yes.
Now, I always get these 2 confused.
I think a lot of people do.
Can you maybe just clarify in simple terms what the difference is? Maybe using an analogy or something.
Sure. So imagine you're like a detective investigating a crime, right way.
Okay, like this.
So technical analysis is kind of like examining the fingerprints, the footprints, any physical evidence, trying to piece together what happened.
Yeah.
And in trading, that means you're looking at charts, you're looking at patterns, you're studying historical price data.
So you're looking for clues.
Exactly. You're looking for those clues to try to predict, future price movements.
Gotcha.
Like, for example, you might look at moving averages, which basically smooth out the price data so you can see the trend more clearly.
Okay.
Or you might look at something like the Relative Strength Index, or RSI.
Right.
That measures the momentum of price changes. So it's really all about those data points, the historical trends.
Okay, so then what about fundamental analysis? Is that more about the why behind the price movement?
Exactly. Yeah. So if we go back to our detective analogy, fundamental analysis is like interviewing witnesses, trying to understand the motive behind the crime, right?
Yeah.
So in crypto, this means evaluating the underlying value of a cryptocurrency.
Okay.
So you're looking at the technology behind it, the team, the market sentiment, even something called tokenomics.
Tokenomics. Now that's a new one for me.
Yeah. So tokenomics, it's basically like the economic model of a cryptocurrency.
Yeah.
It looks at, how many tokens there are in total, how they're distributed, and basically the mechanisms for creating value.
Interesting.
Think of it as the financial DNA of a project. So by considering all these factors, you can kind of gauge whether a cryptocurrency is fundamentally sound or if it's just, hype driven.
So it's kind of like if you're investing in a stock, checking if the company's actually making money.
Exactly, yeah. And the idea is by combining those 2 approaches, technical and fundamental, you get this much more well-rounded perspective.
Yeah, that makes a lot of sense. Okay, so moving on to risk management. The book really stresses this 1.2 risk-reward ratio.
Right.
I was, struggle with this part. because it seems like, so specific. So why is that specific ratio so important, particularly for a newbie who's just getting started with swing trading?
Okay, so let's simplify this, right?
Yeah, please.
Imagine you're, a batter in a baseball game.
Oh, yeah.
You don't have to hit a home run every time to win, right?
Wow.
Those singles and doubles, they add up, they matter.
Yeah.
It's the same idea in swing trading. With a 1.2 risk-reward ratio, what you're basically saying is you're aiming to make twice as much as you're willing to lose on each trade.
Okay.
So even if you're only right, let's say half the time, you're still breaking even or potentially even profiting.
So it's like building this safety net into your strategy.
Exactly.
It takes the pressure off a bit,
Yeah.
knowing that not every single swing is going to be this massive home run.
Exactly. And it helps you, avoid those emotional traps that can really mess you up.
Right.
Because when you're thinking about, oh, I have to be right every time, that's when you start making impulsive decisions.
Yeah, yeah. And that actually brings us perfectly to that final lesson, patience.
Right.
Keeping those emotions in check. It's way easier said than done, I think.
Yeah.
Especially when you see, crypto prices fluctuating like crazy.
Oh, absolutely.
Like 1 minute you're up, the next minute you're down. The book mentioned this prenuptial agreement with your emotions.
Yes.
What exactly does that mean? What are some practical things that someone can actually do to kind of stay level-headed when everything around them is just going haywire?
Okay, so this is really about having a plan and sticking to it.
Okay.
No matter how tempting it gets to, deviate when things get crazy in the market. Think of it like this. You wouldn't change your wedding vows just because you had one little disagreement, right?
Yes.
Your trading plan, it's your anchor. It's your commitment in the storm.
I like that analogy, yeah. So, okay, what are some concrete, tangible things I can do to create that prenup with my emotions, so to speak?
So one really helpful tool is setting what's called stop loss orders.
Okay.
Basically, this automatically sells your cryptocurrency if it drops to a certain price.
Okay.
So you're limiting your potential losses. It's like an emergency brake for your investments.
Yeah, I like that.
Another thing that's super helpful, and I do this all the time, is taking breaks.
Yeah, yeah.
Especially when things are getting really intense. Step away from the charts, go for a walk, clear your head.
Yeah.
Because that really helps to prevent making those emotional decisions, whether it's driven by fear or FOMO or, greed.
Right. Those are all the things that can really trip you up, right?
Exactly.
Okay, so those are some good practical tips. Now, the book also recommends starting with paper trading before you actually, jump in with real money.
Yeah, paper trading is a great way to practice.
Yeah, can you maybe explain what paper trading is and why it's so beneficial?
So imagine a flight simulator for pilots, right?
Okay.
Paper trading is essentially that for traders.
Yeah.
It lets you practice your strategies, test different approaches, get comfortable with the platform, all without risking any real money.
Oh, that's huge.
Yeah, it's a dress rehearsal for the real deal.
Yeah, it's risk-free, basically.
Exactly.
So I guess, just to recap, the key takeaways from this deep dive.
Yeah.
Identify those long-term trends.
Right.
Analyze the market using both technical and fundamental approaches. Manage your risk, like a pro with that risk-reward ratio.
Absolutely.
And then stay patient,
Yeah.
stay emotionally detached.
Easier said than done, but it's the key.
But it's so crucial. So it's almost like a recipe. If you follow these, these steps,
Yeah.
it could lead to swing trading success.
Yeah, definitely. And I think the really cool thing about these principles is that they go beyond just crypto.
Oh, yeah, for sure.
Think about it, understanding trends, managing risk, keeping your emotions in check. These are valuable in, your career and your relationships, in your life in general.
Yeah, and decision-making.
For your decision making.
That's a great point to ponder. And, we would love to hear your thoughts.
Yeah.
Any questions that this deep dive has maybe sparked for you. Until next time, happy trading.
Happy trading.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.